Hey everyone, my name's Andy. I'm from the Finding Value channel. I've got Terry Papineau. He's with me. He's a uranium expert. He's been on the channel before. I wanted to get him back on the channel. He's got excellent insights into the uranium sector. So thank you for coming on, Terry. I really appreciate it for coming on the channel.
It's my pleasure, Andy. Always really enjoy our discussions.
Yes, as do I. So first thing I'll start, we've had this big washout over the past, months. We've had a big drawdown. It's been 50, 60, 70% in some of these companies, lots of pain. Have you changed anything with your holdings? Have you swapped any of your holdings? Have you done anything with your uranium stocks?
Actually, no, I haven't done a single thing. I've never shied away from saying and confirming that I'm 100% uranium, and I'm not a trader, so I'm holding my positions in this downturn. Now, it's been very difficult. I've been invested since 2017, and we've seen ups and downs and ups and downs, and there's been periods there where it's been sort of discouraging. But when you look at the fundamentals, I mean, during this downturn, it had nothing to do with the fundamentals. If anything, the fundamentals have just been getting better and better and better and better, and we're just on the cusp, really, of the uranium sector and uranium equities really turning around. So that's sort of what I ponder when I feel discouraged, and it is discouraging at some instances when you're seeing your portfolio down 60%. But I mean, I didn't have any powder during that downturn either. If I would have had powder, I would have been scooping up some of these equities they were at just really ridiculous prices, in my opinion. And it was just a great buying opportunity, and they're still at great valuations right now. Especially when we consider what I think is going to happen in the future with the uranium sector. So I think that uranium equities and Justin Huhn, Uranium Insider, really explained this well. We just got thrown out. We were just like the baby that got thrown out with the bathwater. People just exited all equities in all sectors, and we're still seeing it. Like, there's still some sectors that are down big. Crypto's down, tech stocks are down, everything's down. So we got thrown. The sector, the uranium sector, followed that trend, and it has nothing to do with fundamentals. I think it's just the general market sentiments where people just risk off and let's take money off the table.
You said that the fundamentals keep getting better. When you're talking about the fundamentals, what exactly is getting better fundamental wise in the uranium sector to be more positive on the sector?
Well, almost everything, actually. Just the interest right now for nuclear power. I mean, 3 years ago, when I got in 2017, when I started doing research in 2016, like, nuclear was like a bad word, like nobody wanted to talk about it. Nobody wants. Now it's clear, it's absolutely clear that nuclear has to be in the mix. Not only does it have to be in the mix, it's the cheapest, the safest, the cleanest form of power out there. And different countries that decided to go more on the renewable side, such as Germany, have really, it hasn't panned out. Like, they're having issues. The price of electricity is going up. They have to fire up some coal plants. They have to fire up their natural gas plants. They're in a power crunch. Like this winter, there could be real issues with regards to energy in some countries that don't have a good, proper base load 24/7 mix on their grid. So we have countries now looking to reverse decisions, such as Germany. Now they're really looking hard at not closing the remaining 3 plants, keeping them open. They're actually looking at maybe operating up some plants that they have closed that are still up, that they still could operate. Belgium is doing the same thing. You actually have California that's reconsidering their decision to close their one remaining nuclear generator, Diablo Canyon. So they're thinking of possibly keeping that open. And so there's just a whole bunch of news items coming out every day in favor of nuclear power. And that is only the existing nuclear reactors that are on grids already. We have a new phenomenon now with the small modular reactors that is popping up. There's more countries in Canada, different provinces, different companies that are really taking a hard look at installing these all over the place. Makes a lot of sense. Bill Gates with TerraPower, for example, partnered with Warren Buffett, and so they're going to be installing a small modular reactor in Wyoming. They're going to take out a coal-fired plant, and the infrastructure is all there. So they're going to plop in a small modular reactor there. So they're going to be continue to offer employment to those people that were working there, and now they'll be producing clean, cheap power, carbon-free power, clean power. So, and this is a phenomenon that's really, really gathering steam throughout the world. So in terms of just the nuclear renaissance, the news is outstanding, and every day there's 2, 3, 4, 5 pieces of news coming out that's positive for nuclear every day. But let's look at the demand for uranium. So there's the supply demand fundamentals there's still a deficit of uranium. The nuclear reactors consume 180 to 185 million pounds of uranium per year. The existing mines are able to produce about 130 million pounds. The secondary market was able to, pile in, and with what's called underfeeding, another 20 to 40 million pounds to kind of meet that gap. But there's still quite a huge gap between the supply demand, and as time goes on, and as these mines producers remain shut, that gap is just growing between the demand and the supply. But what's really intensified, let's say, that supply demand gap this year is the war in Ukraine, Russia's aggression against Ukrainian people. And because Russia controlled a large part of different pieces of the fuel cycle. So when we think of uranium, when you mine uranium to the time where that uranium is actually consumed in a nuclear reactor, there's different pieces to that fuel cycle. And so the first part of the new fuel cycle is, producers will mine uranium, it'll come out of the ground, and it'll be in a yellow powder that we call yellow cake. Then that yellow cake needs to be converted. So there's a conversion service that's important into UF6, which is a gas. And then that gas needs to be enriched in centrifuges. So that part of the fuel cycle is called enrichment, and that's a service that utilities pay for. And then there's the actual fabrication into fuel. So that's another service also that's offered. So with the majority of the nuclear reactors and the utilities being in the Western world, so like the United States, Canada, Europe, Western friendly countries, seeing Russia's aggression, these utilities and these countries now are trying to find, just like natural gas, where Russia controls a big part of that. Mm-hmm. So these Western countries and companies are now trying to find alternate ways to obtain services in the nuclear fuel cycle. Russia controls 14% of the supply of uranium. They control 27% of conversion services, and they control 39% of enrichment services. And it was cheap. Mm-hmm. So a lot of Western utilities would buy these services from Russia. Now they're trying to move away from that. And that's creating a real issue because there's not a lot of capacity in Western world for enrichment and conversion services. So the utilities, because the last part, what they need the most in their nuclear reactors are the fuel rods, is the actual fabrication of the fuel rods. So they'll look, when you're worried about supply, you'll look at what do you need first, and that's what you need first. Then they looked at enrichment. So we need to secure enrichment for the next so many period of time. So they looked at other places where they can secure this service. And in the last 3 to 4 months, we've seen enrichment prices go up significantly. And then they look at conversion. And again, there's not a lot of capacity with conversion in the West. So they will look at securing that. And they did. So that sent conversion prices up significantly as well. This morning, I saw on Twitter someone that lives in the Port Hope area, and Cameco, which is one of the world's second largest uranium producer. And so they have a conversion facility there in Port Hope, and apparently they're hiring like crazy. So they want to increase their conversion capacity there, ramp it up to be able to provide this service to these Western utilities. So there's a really big demand right now for enrichment and conversion. Now, I have to pause here for a second and explain something that's called underfeeding. And this is very, very important. And again, Justin Huhn, Uranium Insider, has talked about this quite a bit on his YouTube videos. So there's a lot more information there. But so what happens at a time when there's low demand for all of these services, especially for enrichment, because enrichment, these are centrifuges that spin, and it's complicated to shut them down or slow them down. So when they have excess capacity, they'll spin this stuff and longer, so they can. So if you provide them with a fixed amount of gas, of UF6, to obtain a certain amount of enrichment, well, once the enricher has captured the agreed upon enrichment in that amount of UF6 that you provided it, they may still have some UF6 left over there that they can continue to spin and continue to produce more enrichment. Because of the huge bear market that we've had in uranium for the past 10 years, there was a lot of excess conversion and enrichment capacity. So this underfeeding created an excess supply, like a sort of an excess secondary supply. That's the equivalent of about 20 million pounds per year. That you don't need 20 million pounds of uranium to provide a certain amount of fabricated fuel. And the expert estimate that this underfeeding has created that we don't need 20 million pounds of uranium per year, because we can actually underfeed and just generate more stuff at the end of the line. Well, now, because utilities are looking at Western conversion and enrichment services, now they'll have to do what's called overfeeding. So in order for them to produce what's really needed, they're going to have to put in more feed. So where you actually had a situation where you had a situation where you don't need 20 million pounds of uranium because of underfeeding. Well, now that's going to swing completely, where you're actually going to have to overfeed by 20 million pounds. So experts are talking about different numbers where that's going to be like a 30 to a 50 million pound swing from underfeeding to overfeeding. So, wow. Yeah, so that's, and Uranium Insider has provided information on this, and it appears as though that overfeeding situation is actually happening now. So, and that's going to trickle down to yellowcake very soon. So right now, utilities are securing the enrichment services they need. Then they're securing the conversion services they need, and now once that's done, they're going to transition to securing those pounds, those uranium pounds, those yellow cake pounds that are needed for the next like 10 years, because this demand outlook for uranium and the supply gap for uranium is just getting very, very big. It's like alligator jaws as you move into the future. So that's why we've seen renewed contracting this year. And that's the next thing that's going to happen in this uranium cycle right now. The contracting cycle is going to start, and the producers are sitting in the driver's seat, and they're not going to accept the $40 or the $50 pounds that maybe could have been signed a few years ago. Now it's going to be in the 70 and the 80 or whatever pounds, and that's going to drive demand for uranium is there. It's going to drive price up, and that's going to have a good impact, positive impact on uranium equities.
When describing the underfeeding and overfeeding, have we seen this transition ever in history before between underfeeding to overfeeding?
It did occur in the last uranium cycle. It was the same sort of scenario where the price for enrichment services went up first, and the price for conversion services went up first, and then the price for uranium followed. But from what I've been hearing, like yesterday, Tim Gitzel, the CEO of Cameco, said that in his 40 years of work in the uranium industry, he's never seen conditions this favorable for both nuclear power and the demand for uranium. He's never seen a setup like this. You have other people like Mark Chalmers, the CEO of Energy Fuels, that said the same thing. I was at PDAC, which is like a miners and prospectors and developers conference in Toronto in June. Spoke to all of the, most of this uranium CEOs. Spoke to different people. I spoke to Scott Melby, who is also a veteran of the industry. He's the CEO of Uranium Royalty Corporation, and he's on the board of Uranium Energy Corporation, and spoke with him at length. He said he's never ever seen a setup like this, and he's been at this for a long time. He played major roles in the uranium sector, and he describes himself as the person who's sold the most uranium pounds in the world. And he's never seen a setup like this, like the one we're seeing now.
And then you said that there's the uranium enrichment, and that Russia is something on the lines of like 40% of capacity, 30-something percent.
39.
Do you think there's an opportunity there for investment for investors to actually get in the enrichment side of it?
Well, yeah. I'm not like I have not done a lot of work researching the different companies in enrichment and conversion, but Cameco, for example, like I said, they have a conversion facility in Port Hope, and it looks like, and they're not operating at full capacity, and they've been clear about that, but they do want to ramp up their capacity there and to be able to produce, maybe not at full capacity, but increase the production that they can do there. And according to someone on Twitter this morning, they're hiring. He's seeing job postings every day where they need this and that and this and that at that facility. Urenco apparently is also looking at increasing their production capacity and ramping up in the future. So there are opportunities there. It's just I can't speak to that because I haven't done research at that level so far.
Okay. And then going into SPUT, we've got this premium, we've got this discount to NAV. I've seen people talk about all this on Twitter and whatnot. I know you released a post on it as well. What exactly does that mean? The discount, the premium, and what ramifications does that have for buying pounds on the market and stuff?
Well, first of all, what we need to say is SPUT is the acronym for the Sprott Physical Uranium Trust. And they have been just an absolute elephant in the sector since they took control of, I can't even remember the name of the old fund, but
Uranium Participation Corp.
Right? Uranium Participation Corp. Yep. Thank you. So yeah, so they took control of that in August last year, and they really revamped it to be able to be a real active player in the sector. And since they've taken control of it, they've purchased about 41 million pounds of uranium in less than a year, which is phenomenal. When you consider that the normal volume on the spot market is about 20 million pounds, so they've really cleaned and mopped up a lot of pounds. And I just like to say about that is the company that they use to do the purchases. I don't remember the exact name of the company and the gentleman involved. I don't want to butcher his name, so I'm not going to name his name, but he's been on a few videos recently. And the last video he was on, he said that when they started purchasing, there was no issue, no problem buying pounds last fall. But he said right now it's not the situation. It's not like that anymore. It's like, they can't go in and they won't be able to find big volume pounds like 1 million pounds a shot or whatever. It's just non-existent anymore. They'll be able to maybe secure 100,000 or a couple 100,000 pounds here and there, but the volume of pounds that are available on the spot market has completely dried up. Tim Gitzel, the CEO of Cameco, said that yesterday as well. Like, the utilities will no longer be able to look to the carry traders or look to pounds on the spot market to, it's just gone. It's evaporated. So the reason why SPUT is important and the premium to discount is important is because SPUT is a big player, and they'll be able to go into the market and actually buy pounds. And when they do, they actually raise the price of uranium because they're bidding for very few pounds that are remaining right now. So as soon as so let's go back to SPUT. So the premium to discount to NAV. So NAV is a net asset value. So what you do is you look at they have 57 million pounds of uranium right now. That's what they're holding, plus cash. So when you look at the value of those pounds, so the price of uranium changes every hour. So, so if you take that number of pounds, you multiply it by the price for those pounds, plus the cash that they hold, that gives you their net asset value. When you just divide the net asset value by the number of shares that are outstanding, that gives you the net asset value per pound. So the price per share compared. So, and that share is being sold at a specific price. So if the number of shares times the price is lower than what the uranium is worth, then it's at a discount to NAV. When the price of that share is lower than the total value, or the price of all those shares times is higher than the actual value of everything they hold, their net asset value, then it's sold at a premium to NAV. The reason why that's important is because when they're at a discount to NAV, they may be holding cash, like they're holding 54 million in cash right now, and they might be able to buy pounds, but they're very careful, and we've seen this in the past 2 or 3 months because they've been at significant discounts to NAV in the past few months. So they don't want to just deploy that cash and put themselves in a situation where they don't have enough cash. So they've been very careful about spending that money. So and when they're at a discount to NAV, they can't raise new money. When they're at a premium to NAV, and they need to be at least plus 1% premium to NAV, they can issue new shares and take in new cash. And when they're doing that, then that allows them to be able to buy pounds on the spot market. And in the past few months, they haven't been buying. They've been at a significant discount to NAV. At one point, they were close to 20% below NAV, which is significant. And they have not been able to be active as they were last fall and this winter. So when that happens, well, there's less demand on uranium on the spot market. So the price of uranium on the spot market tends to go down. But what's been sort of really interesting is that even though they've been at a big discount to NAV in the past few months, price of uranium hasn't really gone down that much. It has trickled down, So that's an indication that there's very few pounds left available. There's actually very few transactions that are done on the spot market. So it's been kind of quiet. But in the past 2 weeks, money has started to flow a little bit back into the uranium sector. So the SPUT has garnered some of that money in the past few weeks. And so they've been closing that gap, so they've been getting closer and closer and closer to par with NAV, and especially in the last 2 or 3 days. And what we've seen is as SPUT, as they're getting closer to being at a premium, we've seen the price of spot start to rise. So that indicates to me that sellers are watching SPUT, they're watching the premium or the discount to NAV, and they're seeing that when the biggest buyer is close to getting back into the market, they're raising their prices. So I might be completely off the mark here. It's just speculation on my part, but that's sort of what I'm seeing. So as soon as they can be back in the green, they're going to start spending money again, which is going to bring the price of spot. It's going to start increasing again. And I think that's when things are going to start to get interesting again in the uranium equities.
Is there a potential here, because you talked about it a little bit before, with the nuclear power plants being extended, we've got this underfeeding to overfeeding scenario. Is there a possibility where all of these kind of align here in the near future, where everybody wants physical pounds, even SPUT?
Well, when I say that the conditions are just the fundamentals are just getting better and better, and I mean, everything is converging exactly to that spot right now. That's exactly, and it looks like the longer it's taking for utilities to come back to the contracting cycle, the more that it's converging exactly to that spot. And I think it's going to be fireworks. Like, if you just compare it to the last bull run from, like, let's call it 2003 to 2007, where the price of uranium went from $9 a pound to $139 a pound on spot, and the equities just were ridiculous, So I think that we're just headed to that spot, and I think that we're getting pretty close to it.
Yeah, I know everyone wants a timeline or a time frame, but do you think if you were to just like ballpark in terms of, I'm not going to hold you to a specific date, less than 5 years, less than 2 years, like what kind of feel do you have? Do you think it's going to happen kind of almost, it could happen at any second? Or what's your opinion?
Yeah, well, so yeah, thank you for not holding me to a specific prediction, because at one point in time when I first started being asked to comment on the sector. At one point in 2020, after a Cameco conference call, I actually called for $70 spot uranium by the end of the year, and I was really, really wrong. And a couple of people reminded me of that on Twitter and YouTube. So I think that because now the information that is coming out is that we're shifting from underfeeding to overfeeding, and we're seeing the beginning of the year, before the Russia-Ukraine conflict, utilities had started to focus on contracting, because Cameco announced that in the first 5 weeks of 2022, they signed 40 million pounds worth of contracts, which was significant for that period of time. And then that stopped. That stopped when the Russia-Ukraine conflict started. And then utilities shifted their focus from the contracting cycle to, hey, wait a minute, Russia controls enrichment, Russia controls conversion. That's what I need first and second. So I'm going to put a pause on long-term contracting here and start focusing on the enrichment and the conversion. That's what they did. And so that picture is getting clearer and clearer and clearer for them. And so now it's clear that it's shifting from underfeeding to overfeeding. So if we see money to continue to flow into equities and into SPUT, and SPUT enters into a premium, and they start buying again, and that's going to start shooting the price of spot uranium up fairly quickly. I think that we're like this fall, I'm expecting some pretty awesome things, and 2023 I think is going to be epic.
Good, good. Yeah, I always pad myself. I usually say, it's gonna be less than 3 years. That's kind of what I do, because the intermediate term, money flows can go crazy. People could be worried about a recession, those types of things. So I kind of always pad it a bunch, because like you said before, things can happen when just the selling pressure comes and kind of washes everything out. So I'm always reserved and constrained, but I'll continue to add and accumulate these on pullbacks, these being uranium sector.
Yeah.
So looking forward, and I know we talked a little bit about the overfeeding, underfeeding, all this stuff. What other things should people be looking at, or what should they be focused on kind of looking forward? Do you see anything out there where you're like, well, this could be a problem, or anything like, if this happens, it could go absolutely ballistic? Do you see anything out in front of us that might be out there that you're either worried about or that you're super excited about?
Well, the setup as it is pointing to ballistic, just to use the word that you used. And I think that I keep saying this, but we're just on the cusp, and the longer it takes to, the better it gets. It's just going to be better. Now there are risks. I've talked about those risks before. Like any incident, nuclear incident, would have a negative impact. Now, depending on what that is, it could be just a short-term, a mid-term impact. God forbid, it's a major thing, and has a long impact on the nuclear industry as a whole. But those are risks. I mean, we just gone through a huge washout and sellout in the broad market, and everything has just gone down. Like, so we've just gone through that. Are we going to see something else? Is it going to go down another 50 to 60% from here? I sincerely doubt it. I think money's on the sidelines waiting to come in at any time. And I think that's what we saw yesterday. We had a great green day yesterday. So, but I mean, what I'm looking at right now is, as I said, money flowing back into SPUT. And so that is going to have an impact on the spot price. And the spot price has, even though like the market is so small and it has really very little impact on the industry itself, it's sort of a market sentiment indicator in terms of uranium equities and stuff like that. So as people see the spot price go up, then they start buying uranium equities, and that has a spiraling effect. But it's the long-term contracting. We've seen the increase in enrichment prices. We've seen the increase in conversion prices. And as we see more volume in pounds being added to contracts, uranium contracting, long-term contracts, and as we see those long-term, as they're published, which is not always clear, as we see the long-term prices increase, the volume increases, then it's going to be game on. And I think we're pretty close to that.
That's good. That's good. And then I guess kind of one of my last questions going forward for a lot of people, preferring to play it like a certain way, the uranium bull market, developers, juniors, ETF, SPUT, like which ways would you like say, I like playing it this way versus this way? Just, as a comment for how bullish everyone is.
Well, the sector is so small. Like, I think the entire uranium, all of the uranium companies combined are sitting at maybe, I don't think it's 30 billion, but it might be between 20 and 30 billion dollars, the entire uranium sector. So, I mean, in the last uranium bull cycle, that entire uranium sector went to 150 billion. So let's say we're sitting at 30 billion right now, and if money starts flowing into the sector and then it takes off again, is it reasonable to think that in 2023 or 2024 that the entire uranium sector is going to be worth 150 billion? I don't think that's a stretch of the imagination at all. Like, I mean, that's a drop in the bucket compared to what some of the, individual companies are worth. So, so if we just take that 150 billion number, that's a 5x from here on average. And I think that we've already seen many signs that we're in a bull market, because when I started investing in this sector in 2017, there were maybe 40 companies, and we're sitting at about 60 to 65 right now. So we're getting new entrants, on a regular basis. So which is a sign that people want to ride this uranium bull wave again. But how to play it? Well, that depends on your risk tolerance, and it depends on what you're looking for. I mean, we have some ETFs that are good quality ETFs. There's 3 of them. We have 2 physical uranium vehicles. We have SPUT Physical Uranium Trust and Yellowcake. So if you want to play it, you could play it that way. And then we have a fund that's kind of unique called Uranium Royalty Corporation. So that's another way of playing it. And then you could buy producers, developers, or explorers. And I mean, explorers, it's not really investing, it's speculation. They have nothing, they're not making any money, they're trying to find something. But if they do, then the returns can be explosive or dramatic. So it all depends on your level of risk, your risk tolerance. And I think that producers are going to do very well. Like I said, the average is going to be 5x. Developers, we have some very interesting developers in different countries, different jurisdictions, different models. They're going to do very well. And usually on the Lassonde curve, the developers, if you could get in just before they start producing, usually they provide a very good return on investment. And then you have the explorers. So I have a mix in my portfolio of I have a few past and sort of producers that are on standby. I have a few developers, and the majority of my portfolio is in explorers.
So you're swinging for the fence.
I'm swinging for the fence. Like I said, you rarely, in my opinion, get a setup in your lifetime like we're seeing now. These sort of situations occurred in the past. Now, were you able to recognize it? Were you able to take advantage of it? Most of the time, people will see it in the rearview mirror, and say, oh, I should have, or stuff like that. Or you might recognize it once it's already underway, and you might be able to, get some significant returns. But if you were in where, like now, for example, where prices are still ridiculously oversold, and if you're able to hold on, and I'm not going to pretend that all of the purchases I made were exactly at the low and the bottom of each equity that I purchased. That's not true. There's some companies that I chased up because I saw value and potential there. And which the last prices I paid for those companies, I'm still down on, and I'm not going to pretend that I'll be able to sell each one of those equities at the absolute top. But I think that I'm positioned right now where I'm swinging for the fences, and we'll see how it goes.
Yeah, the way that the volatility in the companies, like the exploration companies, is quite dramatic. If you're a new investor. So you have to also take into consideration, if you don't like volatility, if you can't handle being 50-60% down, you gotta really sit down and think, well, what can I handle and what should I go after? Maybe the physical holdings of SPUT might be better, because you might not get that 60-70% decline. I mean, you could still get some pretty good declines. The Uranium ETF, that's gone 50-60% down from its high. So I know a lot of people, they want to trade these products. They want to trade because they want to avoid the 50-60% decline. And I think the volatility of this sector is so large where you get caught out, it's very hard mentally to get back in if something goes up 50% in a week, because
Yeah.
it can happen. It can
Oh,
move very quickly. So,
it can
I,
happen. Listen,
so I've always taken the position, hold tight, sit tight, and then cost average in when it's down greater than 30% or something like that. That's kind of how I've handled it.
your comment with regards to volatility is so accurate and so important to discuss. The volatility in these equities is absolutely crazy. Last fall, when we saw the quick dramatic rise in the price of SPUT and then the equities that followed, at some point in time, I'm serious here. Like, I would look at my portfolio and I would like almost lose my breath to see like the huge upswing, like in the space of a day. Like, it was like, I was making more money in in a day than I in two years of work.
Yeah.
But since then, I've also lost 50 to 60% of the value of that portfolio as well. And a lot of people will ask me, you know, for my advice on different things, and I always tell them what the options are, and a lot of them will say, well, okay, I want to swing for the fences or whatever. I'm willing to take a little bit more risk. And I tell them right off the bat, I said, you have to be really, really prepared. That, let's say you're putting in $10,000 or something like that. I want you to imagine right now that you look at your portfolio and you're going to see that $10,000 is worth 4,000. Like, it's going to happen. I want you to really, really understand that it's going to happen. Can you take that? And everybody says yes. Everybody says, oh yeah, I'm sure.
Mm-hmm.
But when it happens, whew, that's another thing. So, since 2017, like I said, I've seen a lot of ups and downs and a couple times there, I felt sort of discouraged. In March 2020, from January, February, March, just sell off. It was like, oh my God, like really discouraging. And this spring was the same thing, like just down every day, and like 60% is a lot.
Mm-hmm.
But I also know, like you said, that the whole thing could go up 50% in a week.
Mm-hmm.
So we'll see.
And with money flows come in and they start going in these small junior exploration companies, some of these companies go up 25-30% in a day.
Yeah, that's right.
And the hard part is, if you're not in it and you see it go up 30% in a day, it's hard to buy it after that happens too, because it feels like you're chasing it. I do think, and I'm just kind of talking, this is my opinion, I'd love to get your opinion too, Terry. I think in the exploration companies, they're going to do a whole lot of nothing, and then all of a sudden it's like, bam, they're going to take off and not look back at some point.
Well,
I think.
Yeah, that's exactly what happens. Let me tell you, and I've spoken about this before, but it reminds me of my my purchase of ISO Energy. It was 2018, beautiful summer day, July. I'm looking at my computer and I decide, okay, I'm going to take a position in ISO. And at that point, that day, the shares, when I looked at my screen, they were trading at 18 cents. And so as I'm about to put my bid, they went up to 22 cents. So they went up by 4 cents. So I said, oh, I'm not buying, like, I'm going to wait. So I just watched them till they got to about 40 cents, where is the first time that I got into ISO Energy. I started buying it around 40 cents. They're at $3.41 right now. And so I think that's a good analogy or of what you're talking about. Sometimes, that, and the reason why ISO Energy went from 18 cents at that time and I think they were probably like a I don't know, maybe a 20, 30, 40 million market cap company at that time with a very low share count, very low float. And is because they were drilling and they were hitting uranium. And so I didn't know that, but somebody did, and somebody was buying and forcing the price up. And then they came out with the news that they were hitting uranium and the grades are outstanding. They just came out with a news release last week, I think it was last week, where they believe that deposit there is going to be close to 50 million pounds. Well, let's just put that into perspective. So that now I am not, I have no degree in mining, and I'm not a geologist and nothing like that, but let's just put that in perspective. Their market cap right now is 364 million Canadian. And in the last bull market, companies that had pounds in the ground that were being bought out by bigger companies because they wanted those pounds in the ground, the average price that those companies would pay for those pounds in the ground was $10 a pound. So, if you make the math, if you just use those old numbers and do the math with ISO Energy, if ISO Energy had that 50 million pounds in the ground in the last bull market and they had been bought out at around $10 a pound back then, they would have been bought out at $500 million Canadian. And so they're sitting at 364 million market cap right now. But however, in this next bull run, like, I don't think that good pounds are going to be sold for $10. I don't think any company that has good pounds in the ground is going to accept $10 a pound. It's going to be more like $20 or $30 a pound in the ground. So, if ISO was to be a takeout target, the price would be 1 billion, 1.5 billion, which is a 5-bagger from here, right?
Mm-hmm. Yep. And
so a 5-bagger puts them at about $15 or $18 a pound, $18 a share. I was buying at 40 cents a share. Am I happy? I'm happy.
And I know you're swinging for the fences with a lot of the exploration companies. What do you look for in some of those companies? If you're a newer investor, you're looking for this stuff, is it preferable to be looking at an explorer that already maybe hit something? Or is it something that you just swing for the fence, they don't have anything, and they just have drill programs that are coming up? Like, what should one look for, you think, in your opinion, or what do you look for in an exploration company for an investment?
Well, that's a good question. And like, there's no sort of set good answer to say here, because you talked about, should they be looking at an exploration company that has, found a bit of uranium and they're continuing to try to maybe see if there's more uranium there. I think that that's a better play than putting money into a company that has not found uranium. Because if you ask any expert, which I have multiple times, and I speak to most of the CEOs of all the companies that I invest in, and I meet them personally, and I drop into their offices and I give them a call on the phone and I text them, and I go to PDAC. And so you talk to anyone and they'll say the best chance of finding uranium in the Athabasca Basin is if you've hit uranium. Mm-hmm. So because if you could hit uranium, then it means there's smoke. It means there might be something around there. There might be a deposit, a bigger deposit. And if there is a deposit and it's a mineable deposit and it's a good deposit and competent rock and all that kind of stuff, then it could be mineable, it could be mineable, and it could be worth a lot of money. Now, the good thing is that these explorers that have hit uranium right now and they're continuing to try to find more have come down significantly in their market caps. So there are pretty good prices right now. So, that would be very appealing to me right now. Whereas you have sort of like the other set of companies, the explorers that have not hit uranium, that are, that some of them have market caps of 4 million or 8 million or 20 million, which is relatively low And I think that when, the price of uranium goes up and this thing takes off, I think that all uranium boats are going to be lifted with the tide. I don't know which boats are going to get lifted higher than the others. I just don't. And anybody that tells you they do is, if someone said which company is going to do the best, I have no clue, and nobody does, because there's so many factors that go into that. But when you're investing in a company that's worth, let's say, $4 million, and uranium takes off, and their valuation goes to 100 million or 200 million, well, 200 million, that's a 50 bagger. Is that going to happen? I don't know. Could it happen? It sure could. It happened in the last bull market. There's a bunch of companies on the stock markets now that are worth 50, that are worth way more, that have way higher valuations than 200 million, and they're bullshit companies. So can it happen? Sure it can. But if it's not a good company, the chances of it happening are lower. So one of the things that I really look for are companies and CEOs that have experience, that have found uranium before, or they have a geological team that know and understand the rocks, and they know what they're doing, but also that do what they say. So when they raise money, and they all need to raise money because they have no revenue coming in, that money that you give them, what are they doing with it? And if they say that they want to drill this or they want to drill that, and if they do what they say and they can execute on that, that's something that's important to me. So I'm looking for people that are competent, that have experience in the business, that they're not just trying to sell you a story because they want to ride this next bull run. I'm very leery of most of the new companies that have come in the past year or so, because I think that most of the good properties and good projects have already been scooped up. So any new company saying, oh, well, we've got this property or this old project and we're looking at that again, and this, well, if those were really that good, why would somebody be selling that or getting rid of that at this stage in the game? So I prefer to stick with, the companies that were there through the bear market, that were able to put their hands on different properties and projects that were interesting in the bear market, and that have, really worked through this whole thing, and that have been responsible with shareholder money. I like companies with low share count. I find that they tend to move, or a low float, they tend to move much more violently when it starts going up. So that's kind of what I look for.
That's good. Thanks for sharing that. Appreciate it. Is there anything else that you'd like to share with anybody who's viewing? Anything else?
What I'd like to share is that I'm as enthusiastic as I've ever been, and I think that everyone that's been really following this sector closely, and you at the beginning of you introduced me as an expert. I'm not an expert. I'm someone that really I consume a lot of information that other people provide, and I'm able to follow up with my own, and like I said, with talking to CEOs and meeting with them and all that kind of stuff. But the true experts in the sector, the ones that really do obtain and work hard to get the information and analyze that information, they're the most optimistic that I've ever heard them be. And as I said, it's taken a long time, and it has really helped me to develop patience with regards to investing, because when it comes to money, you want it now, right? Like, I see people that post and want to buy a Lamborghini or whatever they want to do with the money they're hoping to make. You want that now, but the fact that it's taking longer is making it so much better. And I think that anyone that's in the sector right now, or that enters the sector in the coming weeks, is going to be very, very happy.
Okay, that's good. Those are good closing statements. All right, so how can people reach you, Terry? I think you've got a Twitter account.
Yeah, my Twitter, some people send me direct messages at Terry Papineau 2 on Twitter, and I respond, and so yeah, that's how I communicate with people.
Okay. Well, thank you for coming on, Terry. I really appreciate it. Great getting your insight. And hopefully everyone enjoys listening to Terry and myself chat. So we'll catch everybody next time. Thanks for coming on, Terry. And see you next time.
Thank you.